What's up, everybody? I hope you had a Merry Christmas. Happy holidays to you all. I am going to do my forecast for 2025. There is so much information that I'm about to share with you. So there's going to be a ton of graphs, a ton of slides. I might zoom through a few of them that I feel are less relevant for the residential market, and focus on a few. But I got all this from the California Association of Realtors and their chief economist, Jordan Peterson, who nails it every time. So let's get right in and dive into this, everybody. All right. So, talking about the general position right now of the real estate market, we're off of life support. There's a long road to recovery, but we have acute issues. Our triage, the Fed has normalized their interest rate policies, inflation is fading, demographic patterns are stabilizing, soft landing looks more and more likely in terms of the whole economy. Pre-existing conditions untreated, still got structural issues to deal with, new challenges on top of old ones, and bonus challenges for real estate professionals. This is more talking about what's going on in the real estate industry and the new contracts that we are forced to use, that there's new laws that we're forced to use with buyers in terms of buyer representation agreements. All right, so we are seeing some rays of hope on housing supply. Some markets in inventory is rising, and still a lot of untapped potential on housing. Buy the dip, unseasonably strong winter. What have I been telling you guys for the last 2 months? Right now is the best time to buy. And what also they're saying is be optimistic and not overconfident. Overconfident. The economy is going to grow. Markets are going to improve. Prices are probably going to come up. Rates are going to come down a little bit. Affordability is going to go down as well as prices go up. And the golden rule of California real estate still applies, which means the golden rule is when was the best time to buy? A long, long time ago. When is the second best time to buy? Right now? Because if you look at a chart of California real estate and prices over an extended period of time, it only goes up. It only goes up. So the best time to buy was a long, long time ago, but unfortunately, we don't have a time machine. So when should you buy? Right now. All right. The bond market, not the Fed, is what matters for mortgage rates. So even though we watched the Fed cut interest rates last week, again by a quarter of a point, the bond market went up, and so did interest rates for mortgages. And you can see right here in this graph how the bond market has been affecting interest rates. And right now they're sitting at about 7%. They had gone back down to the low 6, but now we're back at 7. All right. The buyer demand has had negative impacts on the planned recovery. I've been talking about this also for months. We have a huge pent-up demand from buyers, almost across all markets. We are seeing, and that's what's keeping prices going up, and that's what's sort of kind of hurting the market in a way, because there's less sales that are occurring because the prices continue to rise. All right. And then this graph just shows that sales have basically gone down, 2023 versus 2024, and affordability has gone down as well. All right, so this graph is talking about the Fed and their rate cutting and what has happened to mortgage rates. Just like I said, the Fed cut rates, but interest rates went up. We're looking at economic data that also has been affecting it. Inflation is back on the rise. And when inflation goes up, interest rates for mortgages go up. That graph is irrelevant. All right, and then here we go. Let's skip a bunch of this. Oh yeah, this is a good one. Inflation is easing, but prices are not falling. So you might be hearing that inflation has been going down, which it has, and they've got it. Their target was 2%, and right now it's like mid 2. But just like you and I both know, we go to the market, we go to the gas station, we go shopping for clothes. It's just the holiday season. Everybody went shopping for presents. But did prices come down? I didn't see it. I didn't feel it at all. And this graph shows you that even though rates have gone down, that the core PCEs and CPIs they are starting to trend back up. And those are reflective of prices. All right. And then even though the inflation was crazy and now they've got it back under control, we started hearing about unemployment. When you look at all of the statistics combined in aggregate, our actual US economy looks pretty good. We do have a lot of credit card debt, but it is low numbers of delinquency. All right, so delinquency is on the rise, but it's still quite low for the amount of credit card debt that we do have as Americans, which is good news. All right, then commercial uh, office space is growing in vacancy. So big office buildings are sitting highly, they've got high rates of vacancy. That's been one big risk for major cities. If you're investing, I would steer clear of big office buildings. Um, Sales show a market still waiting for rates to drop. That means a lot of buyers are still on the fence and they're talking about, oh, well, when the rates get down to 5%, that's when we're going to go buy. Well, unfortunately, that's not going to happen. We are at the historical average. The historical average for interest rates in our country is right around 7%. And that's where we are right now. So if you're a buyer and you're renting right now and you're like, okay, well, as soon as those rates get down to 5, then we're going to buy. You are just going to continue to waste your money renting and making somebody else rich while you pay their mortgage and give them positive cash flow when you could just have been buying that house now if you can afford to do it and creating your own equity and your own wealth in real estate. So don't wait for the interest rate. Buy the house, marry the house, and date the rate. All right, that's irrelevant to us also. That is irrelevant to us also. Prices have started to normalize. They're on the increase. They're up about 3% year over year, which is good. I mean, if you consider the average price in Westlake Village for a home, the median is right around 1.5 million. So if you're gaining 3% on that, you're doing quite well, quite well. All right, let's see. Let's keep going. Residential building permits are down. New construction is down in California, but that's kind of irrelevant for most of us since we live in Thousand Oaks and Westlake Village. And, everything is built out already. But housing affordability is at its lowest level since 2007. That was at the peak of the bubble. The reason housing affordability is so low and it feels so expensive for people to jump into the market and buy a house is because prices have continued to rise and inventory has continued to drop. So as a result, we have very low inventory, we have high prices, and we have high demand, which makes it hard for buyers. They feel that it's not very affordable to buy a home right now. Oh, the other thing in California that has been the major obstacle in 2024 and looks like it will be a continuing obstacle in 2025 is obtaining insurance. As you know, a bunch of huge insurance carriers left the state of California. Right now, Farmers is writing. There are some other smaller companies that are writing, but State Farm left. You can't get a new policy from them. Allstate left, can't get a new policy from them. So it's been a little bit difficult and tricky in the insurance market. We still are able to get it done though. Worst case scenario, you get the California Fair Plan, which is not the best insurance, but there will be changes in 2025. I've been hearing rumors that more insurance companies are going to be coming back to the state and providing insurance for us folks. All right. The benefits of home ownership are well documented. This is a graph of net worth per capita, and you can see the yellow line down here are renters, and their net worth basically stays flat at a very, very, very low number. And then you have all families in here in this blue line, and that goes up. And then you have here in the top line, these are people that own homes. All right. And as you can see, the net worth of the typical homeowner, this goes up to 2022, far surpasses all families and renters or others. So buy that house now, don't wait. All right, there's a bunch of irrelevant graphs. Rates are one thing, but life happens. These are graphs just sorting population change in California. Active listings in 2024. We see how they were down at the beginning and then inventory rose, and now they're starting to fall again right at the end of the year. All right, bond market indicators. That graph is pretty sophisticated. This is about median days on market for closed sales in 2024. We see that the days on market is starting to fall again as inventory is starting to shrink. Closing prices are up. All right. Where does that put housing? Sales are starting to bounce back, but volatile month to month, which has never been more true. And markets are extremely hyper-local. So in our market right here in Westlake Village and Thousand Oaks, inventory has become extremely low, and we are starting to see multiple offers going way above asking price again on certain homes. But we're hoping that in 2025, the market is going to normalize. We think there's going to be a lot of sellers that are going to come onto the market because they bought their home 4 to 5 years ago in a crazy pandemic market where they felt emotionally overwhelmed by the moment, the lockdown, all these other things that were happening around them, and they decided to buy a house that might not have been the right house for them, but there was such low inventory and such high demand, they felt like they had to get it. And I think now, and what's happened is now these people have so much equity, they have so much equity that they might not necessarily make an upward move or a downward move. It might be a sideways move in terms of the lifestyle and the house they get, but they're going to put their house up for sale to trade for that house that really makes a lot more sense for them. That's where I think a lot of the inventory is going to come from in 2025. Rates are going to come down, but I wouldn't wait around because, excuse me, as I've been saying, when the rates do come down, you're not going to see low fives again. But when they do come down and they do hit the sixes and the low sixes, buyers are going to jump off the fence. And if inventory is still quite slim, then we're going to see prices go back up. So don't wait around. Get the house now. If you find the house you love, you should buy it. Prices are only set to rise further next year. This is the California existing single-family residence median price. Right now in California, the median is $909,400. All right, that is the median. All right, folks, so that concludes my slideshow and my forecast for 2025. So the long and the short of it is prices are going to continue to rise. Hopefully inventory continues to come back on the market as well. If we see inventory come on the market and we see interest rates drop a little bit, then whammo, we could see this market light up. And I mean light up in a good way for both buyers and sellers, because you will see more opportunities, more sellers willing to make deals because they're in a house they don't really love and they see a house they really love and they want to get into it. And you will just need a qualified, confident real estate professional to be able to guide you that has a ton of experience. And I would love to be that real estate professional for you. So please give me a call, shoot me a text, send me an email. I am Josh Brenner with Compass right here in Westlake Village. Thank you so much for tuning in. Next week, I'm going to do a review of 2024 and give you some sales stats. But thanks so much for tuning in. 2025 looks like it's going to be a great year. And I wish you guys the best. And don't forget to get some exercise today, everybody. Have a great day. See you in the next video. Bye-bye.